Hi, it's me Sudhakar. I welcome you all for the first session of seventh chapter of the CA Foundation Accounting Subjects, my dear student. In seventh chapter, we are learning about the final accounts of a sole proprietor. My dear students, final account of a sole proprietor consists of two things. One is about the non-manufacturing concerns. Another is about the manufacturing concerns. We know very well that in case of non-manufacturing concern, here the trader, here the proprietor is not involved in any manufacturing activities. He is just a trader or maybe a wholesaler or maybe a retailer. He used to buy the goods and sell those goods at some margin of profit. But in case of my dear students, a manufacturing concern, the proprietor is involved in manufacturing activities. After manufacturing, he used to sell it to the retailer or a wholesaler, whoever his customer may be. That is about a manufacturing concerns, my dear students. So let us have the basic ideas about the sole proprietor with respect to the non-manufacturing concerns. See, my dear students, what happened here. Okay, fine. See here, what are the things that we use to prepare in manufacturing, non-manufacturing concerns. The final accounts consists of three things, my dear students. One is about the preparation of trading account. Second one is about profit and loss account. The third one is about the balance sheet. We know very well that trading account is an account of all your direct expenses and direct incomes. What and all the things involved in trading account, my dear students? Please remember, trading account includes opening stock. We have to take purchases. From purchases, we have to subtract purchase returns. We have to subtract free samples. The goods used by the proprietor for personal use called drawings. Sometimes purchase of fixed asset wrongly included in purchases. Apart from this, we have to subtract one more item. Please make a note of it, that is goods destroyed by fire. The cost of the goods destroyed by fire is also to be subtracted out of purchases. Please remember what and all the things we have to subtract out of purchases. Please make a note of it. From purchases, we have to subtract purchase returns. We have to subtract free samples. We have to subtract the goods used by the proprietor for personal purpose. We have to subtract even the purchase of fixed asset wrongly included in purchases, my dear students. Apart from this, you have to make a separate note of it, that is cost of the goods, cost of the goods destroyed by fire. These are the items that we have to subtract out of the purchases. After this, we have to record direct expenses, my dear students. What are direct expenses? Remember, wages. Sometimes if you are given with wages and salary also comes here. Second one, carriage inwards. What do you mean by carriage inwards? Any expenses incurred on purchase of goods is called carriage inwards. That includes expenses on purchases. That includes the purchase tax, also known as import duty. I repeat, please remember, very often I used to tell you, my dear student, to learn the final accounts chapter, we need to have the basic knowledge of whatever the things I am explaining right now. What and all the things covered in our direct expenses? Wages, carriage inwards called purchase expenses, import duty, purchase tax, freight and octroi, whatever the luggage charges that is professionally used as a freight and octroi in case of shipment of goods, when you are transporting the goods through the railways, cargo, whenever you are shifting the cargo through the air transport. For all those things we use the word called freight and octroi. Then factory gas, factory and manufacturing expenses, it also includes gas, water, heat, power. I repeat, what and all the things involved in direct expenses, please make a note of it. Wages, carriage inwards, freight and octroi, factory manufacturing expenses, gas, water, heat, power. Apart from this, we have few more items called primary packing expenses, the royalty on production, dock dues and clearing charges. All these involved in direct expenses. My dear students, I repeat the concept of trading account right now. Trading account is an account which is prepared to ascertain the trading result. What is trading result? The trading result can be either your gross profit or a gross loss. How you can ascertain the gross profit and gross loss? See, remember your trading account, already we learned in our inventory chapter, it starts with opening stock, we have to take purchases, then direct expenses, here sales and closing stock. Whatever the difference you are getting, that difference is called gross profit or gross loss. Did you understood? Now, what and all the things we have to adjust in our purchases? I repeat, subtract the purchase returns, subtract the drawings in goods, subtract the purchase of asset wrongly included in purchases, goods destroyed by fire, are to be subtracted out of purchases, my dear students. What and all the things involved in your direct expenses right now? Wages, carriage inward, freight and octroi, factory manufacturing, gas, water, heat, power. Apart from that, we have to take primary packing expenses, dock dues, clearing charges. All these are included in our trading account, my dear student. When once the trading account is completed, we have to go for the next thing, that is profit and loss account. The profit and loss account includes what? See, what included in profit and loss account? Let me explain in detail. See, what and all the things are involved in your profit and loss account. See, profit and loss account includes all your indirect expenses and also it includes indirect incomes. What are indirect expenses and indirect incomes? Those expenses which not comes under direct expenses are termed as indirect expenses. Namely, indirect expenses includes only two things. One is office and administrative expenses, another is selling and distribution expenses. Whatever the list I am typed here, all those comes under, in one way or the other, they comes under any one among these two headings. But for your normal general knowledge, I typed separately like office and administrative, selling and distribution. It includes salary, rent, rates, taxes and insurance, printing and stationery, postage and telegram, audit fees, advertisement. See, free samples is also known as advertisement, that we have learnt in our inventory chapter, discount allowed, depreciation, lighting charges, Please remember, my dear student, lighting comes in P&L, power comes in trading. Why? Lighting is just for general purpose. Power is meant for running the operating the machines. In power, the circulation of energy is more, but in case of lighting, the circulation of electricity is less, which is meant for our official purpose, but power is meant for our factory purpose. Remember, bad debts and ODD. Another important point, my dear student, please make a note of it: interest on capital. Always remember, interest on capital is a expenses. Interest on drawing is a income, because capital is the amount of proprietor for which the business has to pay the interest to the proprietor. You should not think from the proprietor angle. We have to think from the business angle. For the business, my dear children, interest on drawing is capital is expenses, interest on drawing is income, my dear student. Please remember, interest on loan is expenses, interest on borrowing, financial charges, all these termed as indirect expenses. Then selling expenses called carriage outward. Remember, carriage inward trading account, carriage outward profit and loss account. That is our basic PU knowledge. Carriage inward is direct expenses, comes in the trading account. Carriage outward is indirect expenses, comes in the P&L account. Got it? Now, this P&L account also includes your indirect incomes. Sir, question arises, how to identify the income as a indirect? Remember, in any word, if you come across earned, received, recovered. See, earned, received, recovered. For example, rent is a indirect expenses. Rent received is indirect income. Commission, indirect expenses. Commission earned, indirect income. Okay. Discount allowed, indirect expenses. Discount earned, indirect income. Bad debts is a indirect expenses. Bad debts recovered is a indirect income. So ultimately, what I mean to say here, my dear children, any item of indirect along with the adjective of either earned or received or recovered is called indirect incomes. See, I mentioned so many things over here. Interest received is a indirect income. Commission received is a indirect income. Discount earned, bad debts recovered. One more thing, interest on drawings. Please make a note of these two things. Please make a note of these two things. Where it gone? Wait for few minutes. See here, interest on capital. Remember, interest on capital is a indirect expenses. Interest on drawings is a indirect income. Please just don't listen. Make a note of it. Then only it's possible to understand everything, my dear students. After this, we have a next one. That is what? We have a next one. That is a balance sheet. See, in balance sheet, it includes what? Balance sheet is purely based on our accounting equation. What is our accounting equation? Assets is equals to capital plus liabilities, or liabilities plus capital. Both are one and the same. See, assets include what? Two things: fixed assets and current assets. Liability section includes what? Capital and liabilities. These two comes under the liability side, these two comes under the asset side. My dear student, as we know very well, assets includes two things, fixed assets and current assets. In fixed assets, we have a tangible asset, intangible fixed asset. What are the tangible fixed assets? Land and building, plant and machinery, furniture and fixture, vehicles that we can touch, we can feel the existence of the asset, that can be bought and sold, is a tangible asset. But we have some intangible asset, goodwill, patent, copyright, trademark. Apart from that, we have a franchising. They are all intangible asset that we cannot touch it. We cannot feel the existence because they have no physical existence at all. But they can be bought and sold, my dear children. That's why they are called intangible fixed asset. Current asset includes so many things: cash in hand, cash at bank, stock and stationery, bills receivable, debtor. Please remember two things, that is outstanding incomes and prepaid expenses. These two are very, very important current assets. Outstanding incomes, prepaid expenses. Did you understood whatever I am telling you? Please make a note of it. Asset includes your fixed assets and current assets. When it comes to liability section, we have a capital and liability. Capital is the owner's fund, liability is the external fund, my dear students. How to work out the answer for capital? Take the capital from the problem, add the additional capital, add the interest on capital, add the net profit, because they are going to increase the capital balance. Subtract the drawings, subtract the drawings in goods, subtract the interest on drawings, even subtract the net loss, because they are going to reduce your capital balance. See, I clearly mentioned, I clearly typed. Then come to the liability section. Liability includes your loan, bank loan, borrowings, bank overdraft, creditor, bills payable. Apart from this, my dear student, please remember the two more items, outstanding expenses and incomes received in advance. This is your primary PUC knowledge, my dear student. Please remember, outstanding expenses, prepaid expenses are outstanding incomes, prepaid expenses are asset, outstanding expenses and received in advance are liabilities. बाद में two more items remember, life insurance is known as a drawings, income tax is also known as drawings. Sir, why income tax is drawings? Because income tax is paid in the name of a proprietor, but sales tax, GST, now we don't have any sales tax, right? We have a GST. GST is our indirect expenses, but income tax is drawings as a direct expenses. Did you understood? Let us have some points to be remembered, my dear student. Let us have the basic idea of some points to be remembered. See here, the first one, goods purchased, not recorded. Please, student, in order to have the complete knowledge of solving the final account, I mentioned nearly 23 points to be remembered. Please, you go through all those 23 points and make a physical note of it. Otherwise, I put the same PDF in the description box. You can take a printout of it for your further reference. Okay. Now, goods purchased but not recorded. This belongs to our rectification errors chapter, right? Goods purchased means what? Purchases increased. Simultaneously, When you purchased, obviously your creditor will increase. Now what to do? We have to add to the purchases, we have to add to the creditors. See, add to the purchases, add to the creditors. Goods sold not recorded. When you sold the goods, your sales as a income increases. Your debtor also increases. Sales increased means income increased. So we have to add to the sales, we have supposed to add to the debtors. Are you getting my word? Purchased goods but not recorded. Increase the purchases, increase the creditor. Goods sold but not recorded. Increase the sales, increase the debtor. Fine. बाद में wages paid for the installation of machinery. What you did? You paid the wages. You paid the wages for what? For installation of machinery, but included in wages. This point is asked recently in May 2025 batch exam, my dear student, even in January 25 also. When you purchased, when you paid wages for installation of machinery, what to do? We have to increase the machinery. So machinery value is to be increased. But you have recorded wrongly in wages. Wrongly in wages. Now what to do? Subtract from wages, add to the machinery. This is all about your rectified entry. Machinery account debit to wages account. Increase your machinery value because the wages is paid for installation of machinery. My dear children, installation of machinery is a capital expenditure. What expenditure it is? Capital expenditure that is to be added to the capital. That is machinery. Subtract from wages because it is wrongly included in wages. Shall we move on to next one? Like that, so many points are there. Please you concentrate. What happened here? Bills receivable dishonored. This is from bills of exchange chapter. When your bills receivable dishonored, please remember your debtors increased, your bills receivable decreased. What to do? Debtors plus bills receivable minus. That's what I have mentioned. Add to debtor, subtract from BR. See, whatever the points I am explaining in final account, it is the last step of your accounting cycle. The last step of your accounting cycle means whatever the things you have passed, whatever the things you have learned in earlier chapter, starting from journal entry to the rectification of errors, all those points are to be inculcated in preparing the final accounts. So it is a mix of so many chapters. See, we need to have a knowledge of direct expenses. If I ask direct expenses, you should have supposed to have the perfect knowledge what the direct expenses are. Wages, carriage inward, freight octroi, factory manufacturing, gas, water, heat, power. Did you understood? Apart from that, clearing charges, dog dues, primary packing, all these comes under direct expenses. What items are to be included in trading account? Opening stock, purchases, direct expenses, sales and closing stock. What items comes in P&L account? All indirect incomes, all indirect expenses. What comes in balance sheet? Your fixed asset, your current asset. Here capital and liabilities. You should have that knowledge, my dear student. Apart from that basic knowledge, whatever the points I am teaching here, the points to be remembered as a hints, please make a note of it. Many people, what they used to do, you know, they used to teach all these points whenever they come across in the adjustment. But Sudhakar will never teach you like that. I'll always give the points to be remembered in the initial stage itself. For example, if I ask a question, how to treat for unrecorded sales? Increase the sales, increase the debtor. What happened for unrecorded purchases? Increase the purchases, increase the creditor. What happened when the wages are included regarding installation of machinery? Please remember, here wrong amount is recorded in wages, but correct is what? It is to be entered in machinery. Now how to rectify? Increase the machinery, decrease the wages. Similarly, BR dishonored. It's a point of bills of exchange chapter. In every problem we come across, whenever the bills are dishonored, remember debtor increased, BR decreased. That's all. Then another point for your remembrance. See what happened here. 10% investment. What percent investment it is? 10% investment. How much investment? 1 lakh. Remember, 1 lakh rupee is a investment. Investment is a asset. On this 1 lakh, what is the percentage of interest? 10%. What is the 10% of 1 lakh? 10% of 1 lakh comes to rupees 10,000, my dear student. This is the interest. This is what? Interest on investment. Interest is the indirect income. Indirect income, it comes in P&L account. See what happened? Interest on investment in trial balance is 7,000. See, in trial balance 7,000 is already given. But what is the real amount of interest? 10,000 rupees. Please make a note of all these things. For एक साल में हमको 10,000 रुपीस इंटरेस्ट आना था. कितना आया ट्रायल बैलेंस में? 7,000 आया. कितना आना था? 10,000 आना था. What is the difference? 3,000. This 3,000 is called, my dear student, as a outstanding interest. What it is? Outstanding interest. What is the accounting treatment for outstanding interest? Please you make a note of it. It is to be as a outstanding interest. It is a outstanding income. Outstanding income means we have to take it in asset side, we have to take it in indirect income. It is asset and indirect income. बाद में interest on capital already we learned. We have to add it to the capital and expenses. I used to use as a SAD. SAD means expenses, happy means income. Interest on drawings minus from capital. It is to be subtracted from capital only, because we are subtracting the drawings. Along with the drawings you subtract the interest on drawings, but it is a happy, my dear student, as a indirect income. बाद में क्या होता देखिए ना. See another important point here. See what happened here. Rent. What it is? Rent. How much rent is mentioned? Rent is mentioned to you as rupees 11,000, 1,10,000 given in where? Trial balance. Please make a note, a very important concept. We used to come across this concept in many questions of CA Foundation. Rent is given in trial balance as a 1,10,000. In adjustment, rent is due for 1 month is mentioned. Are you mentioned with any amount? Please, my dear student, amount is not mentioned in adjustment. Then how to work out, how to think? For 1 year, एक साल में 12 months रहता, 1 year में 12 months रहता. But he is telling that 1 month rent is outstanding. When 1 month rent is outstanding, we can say that 1,10,000 is a rent of how many months? Is a rent of 11 months. If they mentioned 3 months outstanding, 3 months due, then we have to say that 1,10,000 is a rent of 9 months. Because one साल में एक साल में 12 months रहता है ना. So that's what. Now how to do the answer? So 1,10,000 is a rent of how many months? 11 months. Then outstanding rent for 1 month is what? Take 1,10,000. We have to calculate for 1 month. This 1,10,000 is a rent of how many months? 11 months. Then outstanding rent will be 10,000 rupees, my dear student. Did you understood how to work out when the amount of rent is not given regarding outstanding? बाद में free samples. We learned this concept from our again inventory chapter. Free samples is to be subtracted from purchases. Free sample is the advertisement expenses. It is the indirect expenses. It comes in profit and loss account. Okay, बाद में insurance premium. My dear student, another important point for your long term remembrance. I took some illustrations. Example 1. In trial balance, okay, let it make it so clear. Let the entire things to be in one part for your easy understanding. Okay, fine. Shall I start my explanation? Please, 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 please. बच्चों, बहुत इंटरेस्ट से आप लोगों ने ये पॉइंट को अंडरस्टैंड करना, नहीं तो एग्जाम में बहुत बहुत तकलीफ होता. Chances are there that you commit a lot of mistake. I used to tell you na, many people used to explain during the problems, but I am going to explain before the problem. Please make a note of it. आपका ट्रायल बैलेंस में इंश्योरेंस बोल के 72,000 दिए. ओके, इन एडजस्टमेंट 30,000 बिलोंग्स टू द लाइफ इंश्योरेंस ऑफ प्रोप्राइटर. बच्चों, ये तो लाइफ इंश्योरेंस है. लाइफ इंश्योरेंस बोले तो क्या बोलते हैं, हमें ड्राइंग्स कहते बोलते. अब क्या करना, 72,000 में 30,000 माइनस करना. 72,000 में 30,000 माइनस किया तो आपको कितना आता, 42,000 आता. अब उन्हें बोल रहा, क्या बोल रहा, देखिए ना उधर, बैलेंस इज हाउ मच, 42,000 is paid from April 24 to June 25. See, April 24 to June 25. Do you think when account starts opened on April 24, obviously accounts are closed on when 31st March 25. ये तो closing date. But you have paid for up to what, 30th June. Means you paid from April to June, right? April, May, June, July, August, September, October, November, December, January, February, March, April, May, June. So you paid what? You paid for how many months? You paid from April 24 to March, June 25 means you have paid for 15 months. Right? In that 15 months, how many months are prepaid? You are closing your accounts on 31st March 25. You paid up to June 25. Means what? Prepaid is for 3 months. 3 months prepaid. Are you understanding? Out of 15 months, 12 months belongs to our financial year, remaining 3 months is prepaid. That is called the answer, that whatever I am written here. Please see, insurance premium 72, 30,000 is a life insurance drawings, balance 42,000 hota, balance is for 15 months. In that 15 months, you paid 3 months in advance. That is January, April, May, June 25. So how to work out 42,000 into 3 by 15, remember? It comes to 8,400. So actual rent is recorded in P&L account is 33,500. How much P&L may record karna? 33,600 we have to record. I go for another example of this preliminary insurance premium. See here another example in detail, my dear student. What happened? Okay, is it visible clearly, right? Okay, fine. Shall I start? See here. I used the same figure, I changed only this date. Okay, see, insurance premium 72, take 72. Life insurance premium, it is called drawings, so I subtracted drawings. Balance comes how much? 42,000, same. Now, paid from October 24 to June 25. October, November, December, January, February, March, April, May, June. It is a period of how many months? It is a period of 9 months. Right? Fine. It is a period of 9 months. In this period, you people are closing your accounts on when? We are closing our accounts on 31st March 25. But you paid up to June 25. Means what? The prepaid is for 3 months. उधर 15 months में 3 months prepaid. Here 9 months में 3 months prepaid. Please remember, because he paid the insurance premium not from April, he paid the insurance premium from October. October to June, 9 months. In that 9 months, 3 months is prepaid. So I took prepaid 3 by 9. That comes to 14,000. In P&L we have to record 28,000. Did you understood both the insurance situation? Usually any one among the points will be there in a main exams if the question seems to be tough one. Please make a note of all these two things, both the things. There the insurance premium is paid from April to 25, April 24 to June 25. Here the insurance premium is paid from October 24 to June 25. In both the sentence, prepaid is 3 months, but there the insurance premium covered for 15 months, here it is covered only for 9 months. Fine. Shall I move further, my dear students? See what happened for the next points to be remembered. Closing stock. Still few more points are there, please understand. If closing stock is given in adjustment, we know very well every adjustment comes for 2 times. One, it comes in trading account, another it is to be taken as asset. If closing stock is given in trial balance, it comes only in the asset side. Please remember, this is very important for true or false. If closing stock is given in trial balance, we have to record it only one time. That is, it comes in balance sheet, asset side, but not comes in trading account. Because closing stock, usually adjusting entry, but when it is prepared when it is given in trial balance, he prepared the ledger. That's why it comes only one time. If, see another point, a very interesting point. This point is asked for so many times in our CA exam. Closing stock 60,000, which include goods returned by a customer. What happened? Goods returned by a customer. What do you mean by goods returned by a customer? Sales returns, for which no entry has been made in the books. Another important point. My dear student, here closing stock kitna hai? 60,000. So take closing stock as a 60,000 because it is already included the goods returned. But entry is not passed, right? Then what to do? Then since it is a sales returns, it is to be subtracted from sales. See, बाद में it also reduces the customer. For customer means debtor, debtor में subtract करना. Please store this concept in your mind. Goods returned by a customer for which no entry made. Goods returned by a customer, again it is in a point from rectification of errors. When goods are returned from a customer, your sales decreases, it is to be subtracted from sales. Simultaneously, your debtor also decreases, subtract from debtor or customer or trade receivables. Okay, the next concept. After this, see what happened here. Goods destroyed by fire. What? Goods destroyed by fire. When goods destroyed by fire, again it is our PUC knowledge, first PUC knowledge, the goods are to be decreased. Goods means what kind of goods? Purchased goods, for which insurance company accepted a claim. Claim means asset. Out of 10,000, insurance company is giving only 8,000. So remaining 2,000 is what? Remaining 2,000 is loss. Now what to do? This 10,000 is to be subtracted from purchases. This 8,000 is your asset. This 2,000 is loss, it comes in profit and loss account as indirect expenses. So that is what I explained. Subtract from purchases, asset, indirect expenses. Did you understood? Regarding goods destroyed by fire. Fine. Now let me move on to the next concept. See what happened here. This point was asked in 2 to 3 times of your CA foundation exam. See, 1000 rupees due from Sudhakar. 1000 rupees due from Sudhakar means Sudhakar is a debtor, which included in debtor. Due to him means here the Sudhakar is a creditor. अप्पा कैसा है ना ये सेंटेंस? सुधाकर से हमें 1000 रुपीस आना था और सुधाकर को हमें 800 रुपीस देना है. Are you getting my word? From Sudhakar, business has to receive 1000 rupees called due from Sudhakar. Due to Sudhakar 800 rupees. अब क्या करना? Among the two, my dear student, take whichever is less. Take whichever is less. Which is less among the two? 8,000 is big, 1000 is big, 800 is small. We have to take this whichever is small. This small amount is to be subtracted from Sudhakar as a debtor, from creditor as a Sudhakar. Are you getting my word? This is called interduce. Actually, it is a point of BCom 6th semester advanced financial accounting in holding company chapter we used to come across. Where we used to come across? In BCom 6th semester holding company accounts, that is intercompany dues. But here Sudhakar is not a company, it is a person, interperson dues. In such case, take whichever is less among the two, that less amount, that selected amount is to be subtracted both from your debtors and also from your creditors. Got it? Okay, fine. Let me move on to next one. Bad debts recovered. What? Bad debts recovered. If this point is given in adjustment, then we can say that recovered means it is an indirect income. It comes in profit and loss account. Since it is recovered, this will increase the cash. We have to add to cash. Remember, it is not to be added to debtors. Please remember, it is not to be added to debtors. You make one more point. If the bad debts recovered is given in trial balance, where? Trial balance. Only one answer, indirect income. Only one answer. If it appears in adjustment only, we have to make the two entries. One is indirect income, another is increase the cash. If it appears only in the trial balance, only one item as a indirect income. Fine. Next concept. Almost we are in the ending part. Please remember. Now, another important concept in final account. This is a PDD or RDD. PDD, RDD, RBD both are one and the same. See, PDD, RDD. if PDD is not given in the trial balance? What? PDD is not given in the trial balance. Usually, many people will not prepare the ledger, but I, being a Sudhakar, teach you with the help of ledger. Now the question is when to prepare the PDD ledger and when it is not to be prepared. That you need to remember. If PDD is not given the trial balance, no need to prepare separate PDD ledger account. No need to prepare. What? No need to prepare any separate ledger. Then what to do? Bad debts given in trial balance is indirect expenses. Bad debts given in adjustment, indirect expenses, or PDD given in adjustment, indirect expenses. Discount on debtor is also indirect expenses. So what I mean to say here is, take all the items of PDD, bad debts, discount, everything as indirect expenses. Remember, bad debts recovered not to be subtracted from debtors. Okay. How to remember? Please remember this. All are called indirect expenses. No need to prepare any ledger account. Now the question arises. What question it is? See here. If PDD or RBD given in the trial balance में दिया तो क्या करना? See here. It is better to prepare separate ledger for PDD account. What to do? We have to prepare a separate ledger for PDD account. Now what to do? Bad debts given in trial balance, record in PDD account. Bad debts given in adjustment, record in ledger account. PDD given in adjustment, record in ledger account. Discount on debtors is the indirect expenses, record only in the P&L account. See, it is not to be recorded in PDD account because discount not comes in PDD account. How to prepare the PDD account? See, here we have a opening PDD, right? When the PDD given in trial balance, it is called opening PDD. Opening PDD comes here. Bad debts given in trial balance comes here. Bad debts from, it is not PDD, my dear student. It is bad debts from trial balance. Okay. It is bad debts from adjustment. This is your closing PDD. Are you getting my word? Take the opening PDD. Take the bad debts from trial balance, take the bad debts from adjustment, take the closing PDD, find out the balance goes to the profit and loss account. I used to teach this method for our PUC student itself. In admission retirement chapter, we used to have a PDD along with debtors, right? I never used to teach in a general manner. I always used to teach that in this particular pattern. Okay, बाद में what happened? See what happened here. Almost we are in the ending part of the problem, ending part of the explanation. 16 points completed, right? Okay, fine. Okay, 17th point. See what happened from 17th point. Okay, power is direct expenses, lighting indirect expenses. Outstanding expenses is called liability is equal to SAD. SAD means expenses. Prepaid expenses, asset is equal to happy. Outstanding income, asset happy. Incomes received in advance, liability SAD. This is your PUC knowledge. Outstanding expenses, liability SAD. Prepaid, asset happy. Outstanding income, asset happy. Any incomes received in advance is liability SAD. That is your PUC knowledge. If outstanding or prepaid given in the trial balance, it comes only one time, right? In such case, it is to be recorded in balance sheet only. Means we should not call it as SAD or income or happy. we have to take only asset or liability if it appears in trial balance. Last point for explanation, commission to managing director. If the commission is given on the profit before charging such commission, here it is not before, it is after charging such commission. Make the changes of these two. If it is before charging such commission, if it is after charging such commission, 5%, 5 by 100, 10 by 100, 20 by 100, 30 by 100. But when it comes to after, 5 by 105, 10 by 110, 20 by 120, 30 by 130. This is a method you need to remember. While solving the problem, I tell you why to take by 100, why to take by 105, 110, 120, 130. These are all the points, my dear student. Please you remember all these points before starting the solution of any final account problem. Repeatedly I am telling you, go through this particular video twice or thrice before starting the solution for any problem. Okay? All the best. We will move on to the problems from the next session onwards. Bye. Bye.